Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, there are plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have on board Shweta Jain Investography. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. All right, so let's move on. Let's take Nimisha's question, Shweta, and she's doing SIP in SBI Small Cap. Parag Parekh, we don't know which fund of Parag Parekh, but she's doing an SIP of 1,000 rupees in that, and she wants 1 crore in 15 years. Wants to know if this fund selection, these two funds are fine for her, good for her or not. We don't have her on the phone line, because we could have, try to get in more details, but then this is what we have so far.
So the schemes are good. It's a well-diversified portfolio. I'm assuming Parag Parekh would be Parag Parekh Flexi Cap because that's one of the most popular funds. But I could be wrong. If it is the Flexi Cap fund, then it's quite diversified portfolio. She has started with 2,500, and that's a good amount to start off. Her target is as well there, so it's 1 crore. Who doesn't want to be a crorepati, right? So I think that's a good target as well. But she should set her other goals, whatever they may be, whether it's wedding, whether it's education, whether it's sabbatical, backpacking across Europe, whatever it may be, she should set up her goals. Funds are good, but to get to 1 crore, she would need to invest about 21,000 rupees per month. So as soon as she can get there, as she keeps increasing her monthly investments and get to this magic number, I think she should be good then.
All right, let's move on. Do I have Dr. Rajkumar on phone line with me? Okay, so let's just take his question. We don't have him on the phone line. And okay, exhausting portfolio, Shweta. So HDFC mid cap opportunities, Parag Parekh Flexi Cap, Quant Small Cap, Quant Infrastructure, Bandhan Sterling Value Fund, SBI Contra, PGIM Liquid Fund, Motilal Oswal Mid Cap Fund, Tata Digital India Fund, Mira Asset Fang Plus NYSE ETF. And currently the investment value is somewhere around 60 lakhs. And he wants to convert this, or maybe the corpus that he wants to collect through this portfolio is 1.5 crores with 1 lakh investment every month. Okay, Shweta.
So the portfolio is extremely diversified. Sometimes that defeats the purpose as well, Kavita. So I would say relook at some of the thematic funds, so like infrastructure fund and the Digital India Fund, because I do feel thematic funds need a correct entry and exit, and not always investors can get that right. I prefer the diversified portfolios just so they're lesser volatile and hence lesser action required from investors. HDFC Mid Cap is also a large fund, so 40,000 plus crores AUM. So I think that's something that he can relook at. PGM Liquid Fund, if there is a requirement or if it's an emergency fund, absolutely keep it. If he is trying to time the market, I would ask him to avoid doing that. Contra fund is something that will give returns in different kinds of time periods. So that's something that he may have to be a little more patient with. 2 years is a really a short time, but in 5 years, definitely he can get there. In 2 years, he is not going to reach his magic number of 1.5 crores, but in 5 years, he can definitely get there.
So, Shweta, one common thing that we saw in this portfolio, Dr. Rajkumar's portfolio, and also we've been seeing this in a lot of other investors' portfolio also that they send on the show. People try to buy the best performing funds, okay? And whichever category, if the fund is performing really well, they just want to dump it in their portfolio. And maybe that's also the reason why Dr. Rajendra had so many funds in his portfolio. A clear case of over-diversification. Now, what are the disadvantages of being over-diversified, Shweta? Having so many funds, will this increase my profit? Because if I'm doing a 1 lakh rupees investment, okay, every month in such a portfolio, what are the chances of my portfolio getting doubled before the actual time that I have actually counted for myself?
It's really difficult because see, an over-diversified portfolio means that many more stocks would need to outperform the market rather than a focused portfolio or a correctly diversified portfolio, if I may say so. Because here the base is much higher. So many funds would need to pull up your investment. So many stocks would need to pull up your investment. So a 5 scheme portfolio is what I foresee for 1 lakh here. And I think that would give him much better returns than a 10 scheme portfolio. Also, some of the funds in his portfolio look like he's just picked the best performing fund at that point, which means at a later point, it is going to underperform. Sooner or later, it is going to underperform. There have been time periods when one performing scheme or the top performer would actually be in the bottom 10 schemes the next year or the year after. So I don't want that to happen in people's portfolios. I'm not saying that you should look for the most underperformed scheme and put it there. It may be underperforming for a different variety of reasons rather than just stock underperformance. So I would recommend that you choose a portfolio that suits yourself and are well diversified, right? So it would mean that you have flexi cap, you have a little bit of mid cap, small cap, large cap, ideally passive fund. So it would give you a good diversification. I like the FANG NYC ETF also here because then that gives the international sort of exposure here. But do understand with international exposure, it means that it will underperform or could underperform the Indian businesses. So that is something that you should always keep in mind.
All right, let's move on. I think we have a caller on phone line with us, Krishna Teja from Hyderabad. Hi, Krishna Teja, how are you doing? Good evening.
Yeah, good evening, Kavita. I'm doing good.
Thank you so much.
How are you?
Thank you so much. I'm doing good. Thank you so much for sending us your query. And as far as the question that I can see is you want to know the best category fund to invest in the current market, and you are looking at investing 2 lakh lump sum. Can I know the investment time horizon?
No, it's not hurry. I can take 15 to 20 years. So it's for my retirement plan. So it's not, not in near future.
All right. So, any specific goal that's lined up with this particular investment? Any particular corpus that you want to accumulate?
Yeah, my daughter is age of 4, so for her higher studies.
Okay.
So I would
For
like
higher
to,
study.
Yeah.
Okay. Okay. So, just to cross check if I've got that right, for higher education for your children, right?
Right.
Okay, perfect. So let's figure this out, and we'll also tell you as per inflation, because education inflation moves faster than your general normal inflation, which is food inflation. So we will have Shweta get the calculation right for you also. So Shweta, it's very common when the market is really high, investors feel that they might be just missing the bus, and now is the time to put in the market just in case the market goes up further. So. For Krishna Teja and for all the investors who are thinking of investing at this market high and are preferring a lump sum way to invest, what should be the strategy?
So I like markets when they are a little low or correcting because that's the time when you can actually buy. So it's like going on an Amazon sale or a Flipkart sale and buying stuff, right? When markets are high like this, it's actually making me nervous. And that's the time when most investors will come in, most new investors especially. But it's a great time to invest for them because if their time horizon is 10, 15 years, I'm seeing it from the last 15 years, right? So, but for them from today, for the next 15 years, it's a great time to invest. So we should never forget that. So it's a good time. So for 2 lakhs lump sum, I would recommend that he do a systematic transfer plan. So what it is simple. He will first invest in a liquid fund. So for example, I would recommend a passive fund like a DSP Nifty 50 fund. So what he can do is put it in a DSP liquid fund and just start an STP, that is a systematic transfer plan, to DSP Nifty 50, which means an amount every month instead of cutting from his bank will go from his liquid fund. So it's just like an SIP, but it's sweeter because it is in the liquid fund, so you can't touch that money and you can't spend it. So say he moves 20,000 every month. So for the next 10 months, this money will move from DSP liquid to DSP Nifty 50 and he will get the benefit of staggering. If markets in the meanwhile were to correct, he will get that advantage and buy more units. And if it keeps moving up, that's fine. His portfolio value will keep going up. So he has a win-win kind of a situation. For 2 lakhs, I would recommend that if he's a new investor, he can do a DSP Nifty 50 only, or do an addition like a PPFAS flexi cap, Parak flexi cap. If he wants a little bit of small cap, mid cap exposure, he can do Kotak emerging equity. But I think if he is a new investor, just keep it simple for now. Do it in one fund and not worry about it, because this one fund is still investing in 50 stocks. So he should not really worry about saying it's just one fund. I think sometimes investors, especially new investors, do worry about it. That it's just one scheme and they want to diversify that into 4 schemes or 5 schemes. I don't think he should do that.
All right, do I have Krishna Teja online with me? Krishna, do you want to ask anything?
Yeah, I'm not a new investor. I'm investing since 4 years. So I have index fund. I'm doing SIP in index funds, and
you already have index funds. Oh, okay.
Right,
So I think, so these details were not actually given to us. Okay, so quickly, if you can just tell us the name of the funds that you already have in the portfolio.
Yeah. Nippon S&P index fund, I'm doing 4,000 SIP. And I have 2 lakhs of lump sum in Kotak small cap since 3 years.
Okay.
And I'm doing the ICICI Technology Fund 3,000 SIP since 2 years, 1.5 years.
Okay. All right. So
and my wife also, I'm having similar type of portfolio. So
all right. So let's just because I'm running out of time, Krishnaja, I'm so sorry we did not have these details earlier. Shweta could have planned it really well, but then so far, whatever you've been able to gather, Shweta, quickly, what would you recommend?
Then I would tell him, if he already has a passive fund, then let's do a Kotak emerging equity and a combination of Parak flexi cap, because the schemes that he mentioned would not have a huge overlap with these funds, and this would also give him that international exposure that he didn't mention in his portfolio, and I'm hoping it isn't there, so this will give him that.
All the best, Krishna Teja. And with that, it's time to wrap up. Thank you so much, Shweta, for being on the show and helping our viewers with their financial portfolio queries today. And before I sign off, I'm going to leave you with our WhatsApp number and our email ID. And on the Money Show, we are also doing a tax classroom where we are trying to help you file your income tax returns. So any question related to that, do send us your queries on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.